You're not going to believe what's happening at Ford dealerships right now, because across the United States, lots are overflowing with unsold vehicles. And when I say overflowing, I mean rows and rows of F-150s, Broncos, Escapes, Explorers, and Mach-Es sitting untouched for months. Dealers are privately sharing photos of fields stuffed with inventory, complaining that they've never seen anything like this. Rising interest rates and stubborn inflation have pushed buyers away, and Ford vehicles are now sitting for record levels of days on lot. Some dealers say trucks are sitting 150 to 200 days or more, and they're running out of space to park them. And when inventory piles up this badly, you know what happens next. Massive, desperate discounts. Ford is quietly allowing dealers to take 40-60% off certain models, especially on F-150 trims that used to sell themselves. Bronco Sport, Escape, Explorer, even the Mach-E EVs, all being slashed with hidden rebates, secret factory incentives, and special dealer cash Ford doesn't want to advertise publicly. They're disguising price cuts as rebates to avoid admitting demand has collapsed. But the discounts are so extreme that some customers are walking into showrooms and walking out with trucks that used to cost $60,000 for close to $30,000. It's gotten so bad that some dealers say Ford is basically giving them money to move these vehicles off the lot just to make room for even more inventory that keeps arriving. And the EV situation, that's where things get really ugly. The Mach-E and the F-150 Lightning, once hyped as Ford's big future, are now collecting dust because demand has absolutely nosedived. Compared to Tesla and BYD, Ford's EVs are overpriced, less efficient, and face way too many reliability complaints. Dealers are refusing EV inventory because they sit for months, draining their floor plan financing costs. Ford has already cut Lightning production, shut down shifts, and laid off workers because the trucks simply aren't selling. EV buyers have moved on to cheaper alternatives with longer range, better tech, and fewer issues. And Ford has no way to compete at the current price point. But the disaster doesn't stop at EVs, because even the F-150, the pride of Ford, the best-selling truck in America for decades, is losing its grip on the market. When America's #1 truck needs heavy discounts to move, you know something is seriously wrong. Competition from Ram, Chevy, and even the Toyota Tundra is heating up, and Ford's never-ending quality and reliability issues are driving long-time truck owners away. More and more buyers say Ford just isn't worth it anymore. And for a brand built on truck loyalty, that's a nightmare scenario. Customer backlash is growing louder by the day. Social media is filled with angry Ford owners complaining about transmission failures, glitchy electronics, infotainment freezing, rattling interiors, and an overwhelming number of recalls, over 1 million in the last year alone. Every time Ford issues another recall, trust falls even further, and resale value drops. Dealers, absolutely panicked, have started doing things we've never seen before. Free lifetime maintenance packages, thousands of dollars in mystery bonuses, 0% financing even when interest rates are sky high, and even calling customers back over and over begging them to buy. Some are offering take the truck home for the weekend gimmicks because they're desperate to get people behind the wheel of vehicles nobody is asking for. The truth is, people don't want Ford vehicles in 2025 because Korean and Japanese brands offer better value, used car prices have fallen, repair bills for Ford models are too high, and Ford's leadership keeps changing direction. EVs, hybrids, gas. Nobody knows what the company actually wants to do. And behind the scenes, the financial situation is even worse than Ford wants to admit. Their EV division, Ford Model E, is losing billions every single year. They're cutting production, delaying future EV models, and even asking suppliers to reduce output because they can't afford to make vehicles that won't sell. Investors are quietly panicking as inventory keeps piling up and profit margins collapse. And globally, Ford is losing the battle against China faster than anyone expected. BYD, Geely, MG, and other Chinese automakers are offering cheaper hybrids and EVs with better range, better tech, and better pricing than Ford can hope to match. While Chinese automakers innovate at lightning speed, Ford is stuck cutting prices just to survive. Everything Ford is doing right now reeks of desperation, switching focus from EVs back to hybrids, rushing out redesigns, promising efficiency improvements, and slashing prices across the board. But the question hanging over the entire industry is simple. Can Ford survive the next 5 years with this level of chaos, uncertainty, and financial loss? Or is this the beginning of something much bigger? And as we watch Ford scramble for solutions, the situation keeps spiraling because Ford's fixes aren't slowing the collapse. They're exposing it. As dealers continue sounding the alarm, many are saying Ford's hybrid pivot feels rushed and unplanned, more like a panic response than a strategic move. Internal leaks claim Ford is scrambling engineers between EV and hybrid programs, creating delays, confusion, and half-finished designs. At the same time, customers walking into dealerships are getting mixed messages. Some representatives push EVs, others push hybrids, and others desperately try to dump old gas models before new shipments arrive. This inconsistency is driving people straight to competitors who actually have a stable lineup and a clear direction. Meanwhile, Ford's once loyal truck buyers, the backbone of the company, are quietly slipping away because they're tired of recalls, tired of rising repair costs, and tired of trucks that feel cheaper every model year despite climbing MSRPs. Ram buyers are praising smoother rides, Chevy buyers are praising reliability improvements, and Toyota continues to win buyers who value consistency. Ford's attempt to win them back through discounts may work short-term, but it destroys long-term brand value, creating a cycle where customers wait for deals instead of paying full price. And behind closed doors, suppliers say Ford is quietly canceling or delaying orders, hinting that production cuts are happening faster than the company wants to admit publicly. Reports claim Ford is renegotiating parts contracts because they no longer want to commit to high volumes. Plants are operating below capacity, and unions are growing nervous as shifts get shortened. Even Ford's international operations are showing stress. Europe is struggling, South America is unstable, and China is a complete disaster for the brand. In China, Ford can't even compete on price, let alone technology, because companies like BYD produce EVs and hybrids so efficiently that Ford's vehicles look outdated before they even hit the showroom. And while China's automakers expand globally at record speed, offering affordable, tech-packed cars, Ford is still figuring out how to make EVs profitable. This gap isn't shrinking, it's widening every quarter. What makes all of this even more alarming is the growing disconnect between Ford's executives and the reality dealers face on the ground. Executives talk about a transition strategy and balanced electrification, but dealers feel abandoned. Many say Ford is flooding them with inventory they did not request, especially on slow-selling models like the Escape, Edge, and certain F-150 trims. They complain Ford corporate still expects them to take shipments even when lots are full. Some dealers admit they've resorted to renting storage lots miles away because they physically cannot fit more vehicles on their property. Every day those vehicles sit, interest costs pile up, eating into dealer profits until some lots are operating at a loss. Smaller dealerships in rural areas are reportedly struggling the most, saying they've never seen customer traffic this low in decades, and the only tool Ford gives them is more rebates, more discounts, more desperate incentives that cut into what little margin is left. At the same time, the online backlash keeps increasing. Viral TikToks show rows of unsold Ford trucks covered in dust, customers exposing repeated dealer calls begging them to come back for a special deal, and frustrated owners showing problems with new vehicles that should never have passed quality control. Ford's recall announcements, which now feel constant, trigger waves of memes and criticism that spread faster than the company can respond. Every recall damages trust a little more, and every viral complaint pushes another buyer toward Toyota, Honda, Hyundai, or Kia. Even longtime Ford fans on forums are openly admitting they're switching brands because they feel the quality has dropped and the company no longer listens. But perhaps the biggest threat Ford faces isn't discounts, recalls, or competition. It's buyer confidence. Once customers lose faith in a brand, it can take a decade or more to recover. And right now, Ford is dangerously close to losing an entire generation of buyers as younger customers gravitate toward cheaper, techier alternatives. These younger buyers don't have nostalgia for Ford's legacy. They don't care about the heritage of the F-150 or Mustang. They care about price, reliability, tech, efficiency, and Chinese brands, Korean brands, and even some startups are delivering all of that better than Ford. As we watch this crisis unfold in real time, the question becomes, how much longer can Ford rely on nostalgia, discounts, and marketing spin before customers walk away for good? Because at this point, Ford is running out of excuses. The company keeps promising that the next lineup will solve everything, that the upcoming hybrids will restore momentum, that the refreshed F-150 and new EV platforms will finally hit the sweet spot. But buyers have heard these promises before. Dealers say Ford has been overhyping future products for years, while the vehicles actually arriving on their lots continue to suffer from early build issues, software bugs, and cheap-feeling interiors. And the constant delays only make things worse. The next generation electric platform pushed back, new battery tech delayed. Affordable EV still years away. Even hybrid plans are being reshuffled so quickly that insiders report teams are unsure which models are actually greenlit. All of this chaos leaves customers confused and hesitant, and nothing kills car sales faster than uncertainty. Meanwhile, the financial pressure is turning brutal. Behind the scenes, Ford is funneling money into warranty repairs, recall campaigns, and software patches that cost millions. Their margins are shrinking not because customers aren't interested, but because so many vehicles require fixes before they even hit the road. Some analysts estimate Ford spends more per vehicle on warranty-related issues than almost any other major automaker in the US. And as these costs pile up, the company's profits thin out. Investors are calling for leadership changes, suppliers are asking for firmer commitments, and employees are stuck wondering where the company is actually heading. Even Ford's EV battery partnerships are facing strain, with some suppliers questioning whether Ford can hit the demand targets needed to justify long-term investment. Then the momentum of this downward slide could become unstoppable. Analysts warn that once a brand becomes associated with heavy discounts, customers begin to expect them permanently, which destroys pricing power and devalues every future model Ford plans to release. And that's exactly what's starting to happen. Buyers are openly saying they'll wait for the next big rebate or come back when Ford drops another 10 grand off the sticker. This mindset traps Ford in a cycle where the only way to move inventory is to sacrifice profit, which then forces more cuts, more delays, and even more pressure on the company's bottom line. It becomes a slow, grinding spiral that's incredibly difficult to break. Dealers are feeling that pain firsthand. Some are reporting that even after slashing prices and stacking incentives, customers still hesitate, asking why the discounts are so extreme and what that means for reliability. Others say customers test drive a Ford, enjoy it, but ultimately buy a competitor because they fear getting stuck with a vehicle that might not hold its value or could face recall after recall. This uncertainty, this doubt, is poisoning the brand's reputation one shopper at a time. And in an industry where competition has never been fiercer, Ford simply cannot afford a crisis of confidence. At the corporate level, Ford's board is pressuring leadership for stronger, more decisive action. There are whispers about a possible restructuring of the dealership model, deeper investigations into repeated quality control failures, and even discussions about shifting more production to lower-cost regions just to stay competitive with global automakers. But each of these moves carries risks, alienating unions, upsetting dealers, or further damaging worker morale. Ford is stuck having to choose between bad options and worse ones. And the longer this drags on, the harder the choices become. Supply chain partners are also beginning to hedge their bets. Some suppliers have started diversifying away from Ford, signing more deals with Asian and European automakers who offer more stable production commitments. A few have even reported delayed payments, renegotiated contracts, or sudden volume reductions from Ford that signal deep financial strain. When suppliers start losing confidence, it becomes a chain reaction. Parts delays get worse, production becomes inconsistent, and quality slips even more. It's a vicious cycle the industry has seen before, and it never ends well. Meanwhile, Ford's competition isn't waiting around. Ram is gearing up for a major reboot, Toyota is accelerating hybrid production, Chevy is tightening up its reliability game, and overseas brands continue flooding markets with affordable, feature-loaded models. Every day Ford spends trying to stabilize is another day its rivals pull further ahead, and customers can see the difference. Walk into a Toyota or Hyundai dealership and you'll find stable pricing, clear direction, and vehicles praised for quality. Walk into a Ford dealership today and you'll find massive discounts, mixed messaging, and staff who are clearly stressed about moving metal. And all of this is happening at a moment when the global auto industry is transforming at breakneck speed. New battery tech, AI-driven manufacturing, super efficient hybrid systems, and ultra-low-cost EV platforms are reshaping what customers expect. And Ford is struggling just to keep up with yesterday's demands. The fear among insiders is that if Ford doesn't catch up fast enough, they might not just lose market share, they could lose relevance in a world where innovation determines survival. Inside the company, morale isn't any better. Employees at assembly plants report uncertainty around future shifts and new product timelines. Rumors are circulating about temporary shutdowns, extended downtime, and entire model lines being reconsidered or pushed back. Ford's engineering teams, stretched thin between EV, hybrid, and traditional gas programs, are facing burnout. Some of them anonymously say they're not sure what the company's true mission even is. Build EVs, build hybrids, double down on trucks, cut costs, survive. The mixed messaging from leadership is creating a fog of confusion that affects everything from design decisions to supplier contracts. Without a clear roadmap, Ford risks wasting precious years while competitors move ahead. And speaking of competitors moving ahead, China isn't slowing down. While Ford debates strategy, Chinese automakers are releasing new EVs and hybrids every 6 months, each one cheaper, more efficient, and more technologically advanced than the last. BYD in particular has become a giant that even Tesla fears. Their ability to profitably produce EVs at prices Ford can't even imagine is reshaping the global market. And as BYD, Geely, MG, and others begin targeting Western markets, Ford's leadership is watching a tidal wave approach with no real solution in hand. Even if tariffs delay Chinese brands from entering the US, they're already taking over emerging markets that Ford used to rely on for growth. If Ford can't compete on price, can't compete on efficiency, and can't compete on technology, the long-term outlook becomes grim. At the retail level, customers are sensing all of this uncertainty. When buyers walk into a Ford dealership today, they aren't walking in with excitement. They're walking in with caution, skepticism, and a long list of concerns. They're asking about recalls. They're asking about battery replacements. They're asking why prices are being slashed so dramatically. They're asking why resale values are dropping so fast. And when a brand reaches a point where customers are more worried than interested, that's when loyalty begins to crumble. Some dealerships are now reporting lost sales, where customers test drive a Ford, love the features, love the look, but ultimately buy from Toyota, Hyundai, or Chevy simply because they feel those brands are more stable. That hesitation is something money can't fix with rebates or flashy incentives. And as this tension builds, Ford is preparing behind the scenes for a full-scale restructuring, and one that could reshape their model lineup, workforce, and manufacturing footprint. Executives know they can't keep bleeding cash at this rate, and they can't keep shipping inventory that dealers can't sell. There are whispers of more aggressive hybrid rollouts, potential discontinuation of underperforming models, and even strategic partnerships that could help Ford catch up technologically. But these are long-term solutions, and the crisis Ford is facing is happening right now, day by day, as vehicles continue stacking up on lots and consumers drift further away. The road ahead is only getting tougher, and unless Ford pulls off a massive turnaround, the cracks we're seeing today could turn into a full-blown collapse over the next few years. Dealers are already preparing for a scenario where Ford is forced to slash production even more aggressively, which would mean fewer shifts, fewer models, and fewer jobs. Some industry analysts are even suggesting Ford may need to completely rethink their US lineup, cutting slow-selling SUVs, consolidating trims, and focusing entirely on a handful of high-volume models just to stay competitive. But even that approach carries risk because Ford's remaining high-volume vehicles aren't performing the way they used to. The F-150 is losing dominance, the Explorer is aging, the Escape is slipping behind rivals, and the EV lineup hasn't delivered the breakthrough Ford needs. If the company can't stabilize any of these cornerstones, the entire structure becomes shaky. Meanwhile, customers who used to be brand loyal are starting to look elsewhere, not because they want to, but because they feel like they have to. They're frustrated with long waits for repairs, repeated recalls, and tech issues that require constant software updates. They're worried about future resale value, especially after seeing how quickly used Ford EVs and some truck trims are dropping in price at auctions. Even the hardcore Ford fans, the ones who used to say, "I'll never drive anything else," are starting to question whether staying loyal still makes sense. Online forums that once defended Ford fiercely are now filled with threads from lifelong owners switching to Ram, Toyota, Hyundai, or even considering Chinese brands as soon as they enter the US market. That shift in mindset is the real danger Ford is facing. Once loyalty breaks, it rarely comes back, and the pressure is only going to increase as more hybrid and EV options flood the market. Toyota's hybrid strategy is winning massive consumer trust. Hyundai and Kia are rolling out vehicles with superior tech at competitive prices, and Tesla continues to maintain a grip on the EV sector despite its own challenges. All of this leaves Ford squeezed in the middle. Not cheap enough to compete on price, not reliable enough to compete on durability, and not advanced enough to compete on technology. The company's identity crisis is becoming obvious to the public. Is Ford an EV leader, a hybrid challenger, a truck powerhouse, a value brand, a premium brand? Right now, it's trying to be everything at once and succeeding at none of it. Behind the scenes, Ford executives are racing to craft a message strong enough to calm investors, reassure dealers, and convince customers the company still has a plan. They're talking about smart scaling, leaner production, and focused electrification. But those words won't matter unless the vehicles hitting the road actually improve in quality and price. Because at the end of the day, customers care about three things. Can I afford it? Can I trust it? And will it hold its value? And for Ford, all three of those questions are becoming harder to answer. As this crisis deepens, all eyes are on Ford's next moves. The next earnings call, the next product reveal, the next incentive announcement. Because the company is running out of time to reverse the narrative. And if Ford doesn't execute flawlessly from here on out in the market, the ripple effects keep growing. Used Ford vehicles are dropping in value faster than expected, making buyers doubt future resale and pushing them toward brands with stronger long-term reliability reputations. Fleet buyers, once Ford's lifeline, are also scaling back, citing inconsistent quality and rising maintenance costs. Several rental companies have openly said they're reducing EV purchases after the Lightning and Mach-E proved too expensive to maintain and too slow to turn over. Commercial fleets, which depend on uptime above all else, are drifting toward Ram, Chevy, and even electric vans from newer players offering better range per dollar. Once you lose fleet confidence, it becomes extremely difficult to win it back. And then there's the marketing mismatch. Ford's commercials talk about toughness, innovation, and building for America, but the real-life experience customers report is full of software updates, check engine lights, and service center delays. That disconnect is becoming impossible to ignore. Buyers today research everything. They see the complaints, the recalls, the poor reliability rankings, and the incentives that scream desperation. Ford can't hide this with flashy ads anymore. The public narrative is shifting, and every bad headline pushes it further. But even with all of this, Ford is pushing forward with a series of drastic internal moves that they hope will reverse the trend. Leaked memos suggest sweeping cost-cutting across departments, a renewed focus on simplifying vehicle trims, reducing build complexity, and overhauling quality control processes that have failed repeatedly over the last decade. The question is whether these changes are coming too late, because the speed at which Ford is losing market share to both legacy competitors and foreign newcomers is accelerating, especially as Chinese automakers prepare to enter North America more aggressively, something Ford insiders are reportedly terrified of. The pressure is hitting levels the company hasn't faced in decades. Dealers say if Ford doesn't figure out a clear, consistent strategy soon, the brand risks entering a downward spiral that could take years, maybe even decades to climb out of, because what's coming next could push Ford into an even more dangerous position. Industry insiders warn that if interest rates don't drop soon, and if consumer demand keeps softening, Ford might be forced to implement even deeper price cuts, which would completely obliterate their already thin profit margins. Some analysts are even predicting we may see base model F-150s sold below dealer invoice just to clear out aging inventory. And when that happens, it doesn't just hurt Ford. It sends shockwaves across the entire truck market, forcing Ram, Chevy, and Toyota to respond with reductions of their own. Dealers are already bracing for a potential pricing war unlike anything the modern auto industry has seen, and Ford is the brand most exposed because they're sitting on the largest piles of unsold trucks.